If you're buying a villa in the Lowcountry of South Carolina, we've got some critical information you really need to be thinking about to make sure you're armed and prepared. So let's get after it. All right, guys, today we're talking about something that we think maybe people don't fully understand. Both sellers and buyers need to understand it, and it pertains to villa properties in this term regime. A lot of people talk about regime fees and know that this property has that regime fee, this one has that regime fee, but what does that really mean? What does that mean to you as in particular, maybe as a buyer, and what do you need to know? So let's break it down a little bit. What is regime? Where does that term come from in the context of what we're talking about here?
Well, it's part of something bigger, a term bigger, the horizontal property regime. And we wonder, what in the heck is a horizontal property regime? Well, it used to be way back in the day, you bought real estate, you owned everything below you, and you owned everything up to the heavens, right? But now we have multi-level buildings and things like that. So horizontal is you actually own the space inside your unit, your condominium or your villa, whatever, but you have a percentage ownership of the whole common property.
Right.
And you also have their responsibilities with having that ownership, and there's management of that ownership and things like that. So a horizontal property regime kind of fundamentally affects use. It affects things like insurance, expenses, resale value even. I mean, ownership rights. What can you do while you're there? You're part of a team.
Yeah, you're a co-owner.
You're a co-owner.
You know, so you own your space inside your walls, but then you're a co-owner on the exterior of those walls, and you're a co-owner of the parking lot, you're a co-owner of the pool and the tennis courts or whatever, you're a co-owner of the roof, etc. And that co-ownership is often defined by the size of your property. So maybe you buy a 1-bedroom, 2-bedroom, 3-bedroom, 4-bedroom, whatever is typically the larger the property, the higher percentage of co-ownership you have. And when you add all those up, you're up to 100%.
Right.
And that's that percentage of ownership, of co-ownership, that is defined by each villa.
And I think what's really important to understand is not all horizontal property regimes are equal.
Right.
And by just finding out what the regime fee is in a particular condominium or villa complex and comparing those, that's not in itself gonna give you good information. You've got to understand what the regime does. You got to understand things like how much the regime has in reserves, how they are with their insurance, how they are with what do they actually cover. Some regimes cover this, some regimes cover that. You've got a board of directors that makes these decisions and owners that make these decisions, and they're not all equal.
Yeah, so smart. I love that, because you want to think like apples to apples. Like, oh, well, the regime fee on this 3-bedroom is X and that one's Y. Well, one that's lower sounds good to me. Well, it might not necessarily be the case, because you have to study what's involved in it and how you determine what's involved in it. In one point is the annual budget of the regime, the operating regime, which sort of operates like a little mini business. It's a nonprofit business made up of all the owners in the complex to define, okay, guys, as co-owners, each year we got to set our budget. What do we want to be paying for? Well, some things have got to be paid for. We got to pay for exterior maintenance. We got to pay for a management company. We got to take care of the pool, the tennis court, the parking lot, the landscaping, housekeeping of the common hallways, whatever it is. All these are line items on that budget. And then you kind of get to the end and you're like, okay, well, what about other things like you mentioned that are really big ticket items? Insurance. Is the annual insurance cost boiled into the monthly regime fee?
Right.
Or is it broken out and assessed for separately each year?
Right. And I think another thing that's really important, and this illustrates the importance of it. When somebody wants to borrow money to buy a property that's impacted by a horizontal property regime, they don't realize until they're actually involved in it. The lender is they're looking at their financial qualifications and their strength, but almost more importantly, the lender's looking at the financial qualifications and the strength of the overall regime.
Right.
And things like special assessments, things like delinquency rates, how insurance is handled, appropriate insurance, ages of roofs, things like that, all that can impact the lendability of a certain project.
Yeah.
So someone could be really qualified financially and they want to get a loan and buy a villa over here, and all of a sudden there might be a stop. And so I think it's really important when you're buying or selling to understand where the regime is and how it might impact a buyer that wants to borrow money on that project.
Yes, super smart, important on that. And like, you think about what's the composition of the ownership.
Oh, yeah.
If it's a high percentage of rental properties in there or investment properties, the lender looks at that. Lenders are all about trying to reduce risk, right? They want to make sure if they're going to put their money into this purchase along with the buyer, that they want to make sure they've got reduced risk. So they really favor the regimes that have deep reserves. Don't come out of the gate with a bunch of special assessments all the time. Have a appropriately funded regime fee on an annual basis. Have a good mixture of primary residence and second homes and investments, that sort of thing. So I really appreciate that point, because that's exactly, they're studying that just like a buyer really.
And a buyer should study that. And I think a lot of this is, we all kind of know Hilton Head and the surrounding mainland areas. We have big residential communities, like Sea Pines, for example, or Berkeley Hall, or Palmetto Bluff. I mean, we've got these big communities, but inside those communities are so many different little sub-structured regimes that we need to be aware of.
Yeah, absolutely. And I think that buyers do well to understand that. And this is really why we want to talk about it. Buyers do well to understand that these regimes are, as I said, sort of operate like little individual businesses, and they have a lot of variability in them. So it's important to understand, as you're looking at each one of your options, to also study that down. And for sellers, frankly, to make sure that you're making that information as conveniently available to your buyer prospects in an understandable format. So when a buyer looks at your property, they understand, okay, I pretty much have a good feel for the way this regime operates, whether insurance is assessed separately, what's in the reserve, how is it managed, and also what are my responsibilities as an individual owner versus what the regime is going to take care of. Is the sliding glass door in the back my responsibility, or just the regime take care of it? What about the windows? What about the back deck? Those are things that can have a lot of variability as defined by the master deed of these regimes. So it's really important just to make sure you assume that they don't all operate or are created.
They don't. And so when you're doing your homework, buying or selling, I mean, dig deep at this topic. Don't let this topic be the surprise. Don't let this topic be what derails a real estate deal from happening, because it can all be managed, but it's just important to understand what it is, why it's there, and how it operates.
Perfectly said. All right, guys, that's what we know today about regimes. Appreciate your time as always, and we'll talk to you all soon.